Ladies and gentlemen, it's been a long day. As you can see, I got a bit of a mess behind me. It's been a heck of a day. So I worked all day, but I've been busy. I've been talking a fair amount on Twitter, as always. And a topic came up, which is something that I think about quite often. And it's very important to discuss it because while I'm no billionaire hedge fund trader, I give the concept of diversification an extra bit of effort to think about, to contemplate, to critically analyze, and to make the best possible rational decisions regarding diversification. What does it mean? Do you own dollars? Do you own only dollars? Is that I would imagine that's the vast majority of persons in the world, not US dollars, but fiat. Replace the word dollars with fiat. If you own only fiat, you are not diversified. You only you are only invested in one thing. So folks don't move value into other instruments. For instance, the person that has never owned a stock, doesn't own a 401k, maybe the person who lives paycheck to paycheck, but they're only invested in dollars. That is not diversification. The whole point of diversification is to attempt to spread risk and maximize reward. Do you think if your only investment is fiat, the US dollar, let's say, do you think it's going to go up in value? Well, frankly, all things considered, that's another topic. I think we're going into a deflationary spiral, in which case the value, which the purchasing power of the dollar should theoretically increase based on what I see playing out at a macroeconomic level. Diversification is to spread the value that you have, that you earn amongst many instruments. If the value of the dollar decreases, you sure as hell wish you had something else. And in the case of traditional classic investing, gold, physical gold. Buy some bars, buy some coins, some American gold eagles. So when the dollar tanks and inflates and the purchasing power decreases, whenever in the future that time may be, you got your gold coins, which didn't decrease in purchasing power, and they sure as hell likely increased in their relative fiat value, probably inversely proportional to the decrease in purchasing power of the fiat that was used to purchase the gold in the first place. So that's the whole point. If one thing goes down, something else is more likely to not go down and hopefully go up in relative value. So that's the traditional play: fiat and gold and silver and precious metals. And I am supportive of that. I think that it is important to have something of that nature, be it gold or silver. Now, you investigate and do your own research. The point is, when you do your research, you'll see many gold bulls. You'll see gold bugs that are like, the dollar's going to inflate to infinity. Zimbabwe, Weimar Republic, Venezuela. And the value of the gold is going to be the global reserve currency, so you might as well own a lot of gold. Sure. But then you don't want to own just gold, because then you are not diversified. So now you went from fiat to also gold, but that is not diversified. You need to go further. So we got fiat, we got gold, we got silver. What else is there? We have the stock market. Now, what's going on with the stock market? Holy crap. It's a complex beast The stock market is not just the stock market. It's not an entity. It consists of countless thousands of companies that are all individually complicated, going through their own individual crazy stuff right now, considering all the intricacies of the economic collapse that's playing out. So you want to be very careful. I would say there is plenty of opportunity in the stock market. Now, let's expand on that notion. Clearly, the vast majority, frankly, it's a topic unto itself, but frankly, the vast majority of what's playing out in the stock market is negative. You're going to see company after company collapsing, going into bankruptcy. Is the Federal Reserve buying it? Who knows? But my perspective is always macroeconomic. What is the big picture? The big picture is you want to own fiat, you want to own gold, you want to own silver, you want to own some stock. So you're going to have to do your own research about what to invest in. I will point you in the direction of a couple of macroeconomic observations that I think are very critical into making these decisions. I believe very much along the lines of Brent Johnson, Raoul Pal, that the US dollar is in a deflationary spiral, which means the value of the US dollar relative to fiat currencies around the world is going to go substantially higher. So the playbook of the US government can only be one thing. I've discussed more detail about what it's not going to be in other videos, but I firmly believe that it's going to be in the direction of MMT, which means we're going to see a huge amount of printing. Why? Because the US dollar is deflating. So they're going to have to print to inflate. Will they be able to completely counteract the deflationary force that's being unleashed? We'll see. But what I could safely say is they're going to try. The US government's not going to let the currency deflate where the dollar could buy. Look what happened today. $1 could buy infinite barrels of oil. US oil in one specific futures contract was negative. People were giving the barrel of oil and $35 for someone to take it. Someone had to pay someone else and give them the oil to take the oil. That happened today. This is the first time in history. So these are crazy macroeconomic things that are playing out and ongoing. So with regard to the big picture, the MMT, the federal government is going to print, you can't just give people money. And this is also playing out right now too, with unemployment insurance and the 50% bonus or whatever the hell the policy is. If you give people money, they don't give a shit about work. And that leads to no productivity. And that leads to Zimbabwe and Venezuela. Printing money, there's no productivity, not the balance that is good at all. So the only solution, the only path forward for the government is to print a shitload of money and nationalize employment. So now you're doing the printing to counteract the deflationary pressure that's going on, but you're also not just giving people money, you're giving them a job, which is creating productivity. So what kind of jobs is the government going to give the people? Infrastructure. We're going to rebuild the roads, the bridges, the tunnels. We're going to build factories. We're going to repatriate supply chain. Kudlow, the chief economic advisor of the president, publicly stated, why don't we tell companies to bring all their factories back to the United States and we'll pay for it all. Now, if that's not an MMT Freudian slip, I don't know what is. And that is a perfect example of how MMT in theory should work. Because if you're going to print money and the way you counteract the inflationary tendency is to elevate GDP, the productivity of the people. And that's fundamentally the premise of MMT. That's the balancing of the equation. Now, in theory, it'll work. Do I trust it? No. Am I optimistic about it? No. Do I see that likely to play out? Yes. So that's where I recommend for myself. And those were the bets that I would make. Clearly, that's a little small portion of diversification, but there's no reason you can't take 1-2% of your capital and put it into the large cap construction of the United States. If the United States is about to print 10, 15, 20 trillion dollars and spend it across the country, maybe more, 30, 40, 50, who knows? It's going to go to construction. It's going to go to the largest, most experienced construction companies, which are then going to hire all the employees they need to execute the infrastructure projects that the country has in mind. Now, what these infrastructure projects and these, with all the money, what do you need? You need resources, you need materials, you need concrete, you need steel. For batteries, for cars, you need lithium, graphite, nickel, and cobalt. You need mines. So I see that as a great way to diversify a small bet. U.S. domestic construction, large cap. U.S. mining for ores, steel manufacturers, gravel, concrete, battery materials, lithium, cobalt, nickel, and graphite. Maybe companies that are going to refine those products into battery grade material, which is 100% in-source from China. It's all too obvious to me what is likely going to play out because it's just no other way. There's no other way. How could the national security, the military industrial complex of the United States think it's okay that they get their batteries from China with what's going on? Yeah, they're going to push for a couple trillion to build out the mining infrastructure of the continental United States to get the damn battery materials here. They're going to build the factories to refine the materials into battery grade materials and then build the factories to make the batteries here. And they're going to print the money to do it. It's just logic and rationality. And it's not that it would be a mistake for them not to. If they don't do this, there's no other choice. And I've said why. There's no other choice. You can't just give people money. That's how you Zimbabwe the U.S. All right. So we're talking about diversification. About 13 minutes in. I don't want to take too much of your time tonight. Fiat. Sure. You want your dollars. You need dollars. Dollars of liquidity. Dollars allows you to buy gold, silver, stock, food. It allows you to pay rent. Dollars are great. Have dollars. Great. Have your silver, your gold. You have your diversified equities in the stock market. I think they're good bets. It's not going to be the vast majority of money. You have to start thinking about, with regard to diversification, percentages. If you have $5,000 in savings, you take 1% of it, you put it here. You take 3% of it, you put it here. You take 10% of it, you put it here. It's still your money. It's still your value. It's just in different places, increasing and decreasing in relative value. And that's the whole point. Diversify. For safety and security. It's for yourself and your family. It's the important thing. So now you get into speculative things as well, and there's no reason that cryptocurrency should not be considered. I think they have the potential to change the world because they are literally building the infrastructure, an alternative implementation to the status quo. Requires absolutely no persons to be involved, an automated infrastructure that eliminates the people involved in the status quo implementation. Now, that is exactly what the country needs. That is what you need. If you want to bump GDP, you can't, there's only so many people. So you can't just keep hiring people. There's not enough people. So the only way to continue to bump GDP is to automate things through algorithms, through software, through robotics. I sure as hell would bet on robotics to automate factories so you can produce more and more and more and export. And now you're exporting. Now the U.S. is an exporter in 5, 10 years. The big picture. You got to think 5, 10, 15 years down the road. You got to think about all these large scale macroeconomic concepts. Cryptocurrencies. I know there are thousands of cryptocurrencies. What does that mean? What do you invest in? Why do you invest in it? So, plenty of people have different reasons for investing in different cryptocurrencies. For me, with these macroeconomic concepts that I constantly think about, I tend to think about infrastructure, the parts of what is needed to be a viable infrastructure. What do you need fundamentally for infrastructure is liquidity and interoperability. You need a capacity to convert different forms of assets to one another. And that is done with the likes of Blocknet, Syscoin, Komodo from a UTXO perspective, Unibright, Kyber Network, from a REN protocol, Republic protocol, from a smart contract perspective. Both sides of the coin, from the smart contract plane of existence and the UTXO plane, 1%, a half a percent, 1%, a half a percent. So you take your big $5,000 that you have and you break it down and you allocate it to these different places of value storage. Now, there's also other great crypto projects, so you want to break down further. And we've talked about cryptocurrencies in other videos. I don't need to go too far in depth, but think about infrastructure. Think about the fundamentals of what is needed. Need data storage. You need communications. So, frankly, Digibyte, Bitcoin is liquidity, is value. Digibyte is asset transfer, asset. It's not storage, but asset management because it's so fast and it's immutable, and that's meaningful from a UTXO perspective. And there's almost no other crypto project that has the properties of it in that regard because it's so fundamental. It's a fundamental derivative of Bitcoin, and that's meaningful. So it's not in Ethereum land. It's not a smart contract. It's a UTXO blockchain, and it has history. And history has momentum, and it's not going anywhere. Which means eventually, at some point, it's going to be consumed to exploit its properties to make a profit, a value profit. That's about it. I just wanted to talk about the concept of diversification and ensure folks understand that it's very important not to put all your eggs in one basket. You do not want to only invest your value in fiat. You do not want to overinvest your value in a particular investment. You want to spread the value around. Sure, you could allocate more value to a particular investment depending on your gut instinct of its potential, and that's important. And as you do more and more research, your gut instinct will tell you more meaningfully about which assets you want to assign more value to. And that's how you build a diversified portfolio. Anyway, as always, if anyone has any questions, you're always welcome to hit me up in the chat. You're always welcome to hit me up on Telegram, and I'm always happy to talk about it. But anytime I have an idea that I think people are interested in, or I have a responsibility to inform people, to help them, I will do it. And this is an important topic. Be diversified. Don't overinvest. Don't trade unless you do substantial research, because otherwise, why risk value? Why risk losing value? Invest. But understand what you're doing. And until you understand what you're doing, ask questions. I guarantee you there's always someone available to answer questions. Why? Because at minimum, I'm available to answer questions. So there's always at least someone available to answer questions. So it's a Monday night, 9:20, quick 20-minute video. I will see you soon. I guarantee you'll have more ideas. Talk to you later.